Investments in securities market are subject to market risks. Read all related documents carefully before investing.
What exactly is the Chatur Amrit Kaal? Investing in the compounding story of 2047. If you have seen, fast fashion is now gone beyond metros. Your studios of the world are in tier 2, tier 3. Clear cut people have understood inflationary adjusted return cannot be drawn alone from your bank deposits or physical assets, will not give you the kind of growth that you expect. Financialization of savings is not a year or two kind of story, but it is multi-decade trend that is unfolding. 15 years to reach to 36% of urban population with South Korea in the year 1960 to 60, where our GDP were almost at the same level, or GDP per capita were almost at the same level. So Chatur Amrit Kaal to act as a compounding engine towards the irreversible structural shifts for the businesses that we will own, right? And let the compounding do its work for next 2 decades. If you're a patient investor, this is definitely a portfolio that will create wealth for you. Hello and welcome to the Chatur Amrit Kaal Conversation, wherein we'll discuss ideas, strategies, philosophies shaping long-term investing. I'm Mohit Jain, your host, and I'm delighted to be joined by Mrs. Vaishali Picle, Fund Manager of the Chatur Amrit Kaal Fund. Together, we'll discuss investment philosophies behind the fund, how portfolios are constructed using long-term approach, and what makes India's Amrit Kaal a compelling opportunity. So Vaishali ma'am, it's a pleasure to have you with us today. Most welcome. Thank you, Mohit. Thank you for having me on this show. So Vaishali ma'am, I'll begin with my first question. We have all heard about the Chatur Amrit Kaal Fund. But before we get into sectors, stocks, or even returns, let's begin with the most basic question. Hearing about it for the very first time, what exactly is the Chatur Amrit Kaal Fund? So Mohit, let me simplify this question for you. Amrit Kaal Fund is about investing into the compounding engine, okay, of India's structural transformation. As we all know, 2047, which is 100 years of independence, is being termed as Viksit Bharat. Amrit Kaal is about investing in the journey, investing in the compounding story of 2047. Alright, so the name itself immediately catches your attention. Here, terms like large cap funds, flexi cap funds, but here it is Amrit Kaal, which is in itself very, very different. Why did you choose this name, and what does it represent from an investment perspective? So let me tell you, I think I already mentioned about 2047. And this word Amrit Kaal, from where this has come, as you said, it is the silver era. So this began in 2022 when the Amrit Kaal has been announced. So we believe this 2022 to 2047 is not just a time period. According to us, lot of big transformation that is going to get unfolded during this period. So we believe it is once in generation opportunity where your demographics, your digitization, your manufacturing stories, infrastructure, and your capital market, everything is going to be aligned during this period. Amrit Kaal is not just a time frame, according to me. It is owning the businesses that will compound your capital. The structural stories are going to be irreversible. So it is basically investing into the structural story rather than investing in short-term cycles. That is what Amrit Kaal is about. So ma'am, you talked about time frame, you talked about waves. So this market cycle comes into my mind. Today many investors are constantly seeing new themes. AI, defense, manufacturing, clean energy, so on and so forth. Many thematic funds come and go with market cycle. So where does the Chatur Amrit Kaal Fund fit? Is it just another thematic product, or is it built around a much broader investment perspective? Basically, I would want to reiterate what I said. The portfolio would emphasize here more into structural drivers than the cyclical ones, prioritizing sectors like consumption. That is the biggest story that we believe will be unfolding. Your digitization, your infrastructure, your energy transition, and most importantly, financialization. So we feel that your national priority aligned policy driven measures are going to play an important role during this Amrit Kaal time frame, which is 2 decades from now. And
that benefit will be taken into Amrit Kaal Fund.
Ma'am, when you're talking about core, you've already given out themes which will run for the next wave of 20-25 years. We also talk about core belief of any fund that doesn't change even when markets do. So, what's the fundamental philosophy that forms the foundation of the Chatur Amrit Kaal Fund?
So, Mohit, I will take some time to explain this. How we have coined this entire selection of companies and building of the portfolio is more towards 6 pillars, as I say, or 6 parameters. According to us, we strongly believe that structural growth always delivers predictable earnings. Predictable earnings leads to compounding. Compounding always gives lesser drawdowns and higher investments, reinvestments, and ROEs. If you may ask that which are the structural drivers, so according to me, formalization of economy that has happened in past 1 decade is the biggest driver, and it will unfold in years to come. Second one definitely is your rising income and consumption. That is going to be the second structural driver towards Viksit Bharat. The third is your India public infrastructure, which is digital public infrastructure, which is your India stack going forward. The second one is ROCE. We strongly believe that any company which earns higher ROCE to its cost of capital, right, will definitely do well. So what we say is, if a company is growing, it's not enough. What has to happen is it has to be a profitable growth. So within this, we have set sub-parameters where we say that ROCE has to be upwards of 15 to 18%.
So it's a non-negotiable for you.
It is non-negotiable, absolutely. So ROCE has to be in upwards of 15 to 18%. Free cash flows have to be strong enough. And last but not the least, your capital allocation or discipline in allocation of capital. That plays a very crucial role as far as your company's performance is concerned. This is the second point. First is the structural growth. Second is the ROCE. Third most important is the balance sheet strength rule. So what we see is companies with low leverage, I'm not saying no leverage, but low leverage and strong cash flow definitely outperform over a longer period of time. So volatility will exist in Amrit Kaal. Nobody can deny that we will be in an era which is going to be in upward trajectory, right? So when the volatility will be there, strong balance sheets will allow you to gain the market share. It will allow you to infuse the money when your competition is at the weakest point. When they are not aggressive, you can be aggressive. So this is what our past experience says, that strong balance sheet has a very important role in selection of the company. The fourth one is the quality of the leadership. Now when I say quality of the leadership, we always believe in paying a price or paying a premium to management who has credibility.
Absolutely.
Yeah. Which definitely has good execution capability and very good governance. So over a period of time, over a longer duration, you would know this very well, Mohit, that the quality of management is more important than your entry level value. People sometimes tend to get, little more prejudiced or biased towards entry level valuation, etc., clearly ignoring how the management quality is. So we put lot of trust on this. The fifth point would be your policy beneficiaries. So policy, as I say, is going to be your national priorities. Policy measures taken in the past have definitely unfolded and given a lot of fill up. Your infrastructure push, where your railways, roads, your logistics play a very crucial role. Your Make It India and the PLI push that has happened, the PLI infusion that has happened since inception has created again a multifold effect in terms of your manufacturing and your export competitiveness. We clearly know that upwards of 2 trillion have been infused in PLI in various sectors, in various schemes, which has given a tenfold effect in terms of manufacturing or in terms of export competitiveness building. So we believe that policy tailwind is very important for selection of the company. And the sixth one is the compounding over a period of time. You know very well, I keep telling everybody, I keep telling all my investors that don't try to time the market. The time in the market is important than timing the market. So stay away from the market noise, buy the balance sheet with the strength, and you will reap the benefits. Or wealth is not created by short term investments. So I always keep telling my investors that let the earning compound and let it do the heavy lifting rather than trading into the short term. According to me, the portfolio is aligned to these six parameters or six pillars. Definitely create wealth for our investors over a period of next 2 decades.
Perfectly. So you've talked about six pillars, be it structural growth or compounding or leadership, so on and so forth. When you talk about India's Amrit Kaal, what are the structural changes you're seeing today that gives you confidence in the India's long-term growth story?
What question you have asked me is I would like to put it under the India's building block. Consumption renaissance is going to unfold big time. What is consumption renaissance? India is no more about need based spending or need based economy. We are clearly shifting to aspirational economy or lifestyle spending. You must have heard several times premiumization, right? What it means? It means higher margins for the company, purchase repeat from the customers, and the brand mode. So we clearly are seeing, even post COVID, if you have seen, people are choosing hygiene over paying lower prices or higher prices for any product. So brand versus non-branded products. Here also we are seeing a sea change or a major structural shift in the spending. People want to watch more about social signaling. If you have seen, fast fashion is now gone beyond metros.
True. Yeah.
Your Zudios of the world are in tier 2, tier 3.
Zudio is doing
Right.
tremendously well.
Right? Consumption renaissance is a story that will definitely, so the drivers definitely are going to be your rising income and your urbanization. Urbanization is a more larger theme than consumption, but definitely consumption stands prior to the unfolding of urbanization over a longer period of time. So this is what we believe is consumption is the first one in the India building block. Second and the most important for me, according to me, is financialization of savings. Now, if you see earlier days, historically, people used to have physical assets and not enough financial assets. So clearly, the household transitioning is happening, or household savings transitioning, or structural shift is happening from physical assets to financial assets. Clear cut beneficiary here are your banks, private banks per se, specifically, your insurance companies, your AMCs, your NBFCs. The third one remains your manufacturing and infrastructure. The drivers are Make in India and China Plus One. Your beneficiaries are your capital goods, your defense. These are going to be your primary beneficiaries. The fourth one is your digital forms or digital economies building, where we clearly see that the enterprise shift or the enterprise solution will play a major driver's role. We are into an era where we can clearly coin, like, pre AI and post AI. I definitely believe that AI is not a disruptor, it is a catalyst. Given this, I think the digital building block will benefit IT services, will benefit SaaS and digital platform companies, will definitely benefit payment and infrastructure companies. These are some of the building blocks, including your clean energy transition. Energy security has become utmost important, especially after your West Asia crisis, where your fuel imports are costing your pockets big time. Dependency and the climate condition is the driver here, which is the thrust is self-reliance. Don't go outside, right? Build your own ecosystem, build your own infrastructure for renewables, build your own power transmission, and most importantly, the way we are driving towards the EV segment is going to have a big time positive impact on our economy. So these are few of the building blocks, according to me, Mohit, which will play crucial role into the Amrit Kaal era.
So, ma'am, you just highlighted multiple building blocks of yours. I have just one question for our investors. Over the past couple years, we have seen many investors chasing whatever is working at the moment. For instance, whether it was defense, railway, or even the silver rally. You wouldn't believe, I just saw the fact that in January, the silver peaked. And that was a time when the retail investor entered into the silver with the biggest volume of the era. So, and that was the peak of the silver rally. In a world where everyone seems focused on the next few months, how does the Chatur Amrit Kaal encourage investors to think differently or otherwise?
I tell to all my investors that wealth cannot be created by trading India's story. If you have to create wealth, you have to invest into companies, into businesses that will compound over a period of time and let this compounding be uninterrupted. The moment you want to chase short term stories, cyclical commodity cycles, etc., long term wealth journey gets definitely affected. So, this is my submission to whatever you asked just now. If you really want to be taking maximum benefit of Amrit Kal, then you will have to be invested at least for a decade or two and let the transformation create wealth in your portfolio.
So, ma'am, you are talking about wealth, which puts one word in my mind, which is multi-baggers. So every investor dreams of finding a multi-bagger in his portfolio. But is that really the objective here? Or is the bigger idea to participate in India's long-term economic transformation is the real idea behind Chaturamrit?
Rather than coining names here, I want to simplify it in terms of how we have constructed the portfolio framework. We have bucketed in 4 parts, right? We say the first one are your core compounders, the second one are your structural growth drivers, the third one is your emerging leaders, and the fourth one is going to be your defensive allocation. Now, what each one means, what is core compounding? It is about earning higher ROI and having stable growth. When you say that you want to have a faster growth, which is policy aligned, so it is a structural growth story which you will be having in the portfolio. The third one, as I said, is emerging leaders, where smaller businesses which are more scalable will be invested into. And the fourth one is the defensive allocation, because this is not a 1 year, 2 year kind of story or portfolio building. It has to have a multi-decade wealth creation capabilities. So defensive allocation in the portfolio is must, and so businesses like healthcare, pharma, FMCG, utilities will also be part of the defensive allocation. So this is how we believe that your entire framework is very important, so that your return, risk, volatility, all 3 parameters are taken care of.
You talk about allocation, and as a fund manager, we often hear this term Viksit Bharat 2047. You also highlighted, but for many people it seems quite distant from now, the 20-year journey. But as a fund manager, how do you take this 20-year national story and convert it into an investment decision that you're making today?
So as I previously also mentioned, Mohit, your biggest driver is going to be financialization of savings. What this means is, I had given a small glimpse earlier to you, is historically your grandparents, your great grandparents, what was the asset class that they had, or choice or options of asset class that they used to invest, is coined as physical assets.
Yeah, mostly
They used
real
to-
estate. Like
they used to- yeah.
my grandfather used to invest mostly in real estate. So did my father.
Correct.
Yes.
So cash, gold, and real estate. These were the 3 primary asset class where
True.
the money flow used to go. Over a period of a decade or more, we have seen a clear-cut transition from physical assets to financial. Now, just to give a perspective in terms of numbers, our household savings, the ratio goes in favor of more towards your assets, household savings, which is 70%, and 30% of it goes into your financial. Till date, the ratio is 70% towards your physical, which is your real estate, your gold, etc., and 30% is into the financial assets. So your insurance, your pension fund, your mutual funds, your market linked product, equities,
Yes.
all these are part of your financial assets. Till date, it is still 30%.
And do you know what was it like 10 years before?
just to give an example with respect to mutual funds,
Yes.
10 years back, mutual fund was between 10 to 12% of your bank deposits.
Okay.
That was housed by individuals. Today, as we speak, it is more than 33%, which is of the bank deposit is into mutual funds.
So you're saying India is already moving towards it.
Correct. So since you raised this about mutual funds, very important statistics which I want to share, of course everybody knows about it majorly, is in 2020, the size of our mutual fund industry was 22 trillion. Right? In 2025, we went to 69 trillion. We are in 2026 today. In last 1 year, everybody knows we are in upwards of 80 trillion.
That is massive.
Right? So 18 to 20% growth in a year's time frame is phenomenal.
Correct.
You know, what is the reason which is driving behind, this shift or the structural shift, if I may say, is your rising income, your urbanization. Clear cut people have understood that inflationary adjusted returns cannot be drawn alone from your bank deposits or physical assets, will not give you the kind of growth that you expect. Policy direction supports that goes into long-term savings in kind of PPFs, insurance, etc., where people are forced to do these type of transitions, right? So these are some of the reasons where we strongly believe that financialization of savings is not a year or two kind of story, but it is multi-decade trend that is unfolding, and it is the most powerful theme of Amrit Kaal that is expected to unfold in next 2 decades. So we all know that we are moving towards there has been a vision of $30 trillion economy by 2047 or 2050, right? So we are talking of 7 times our current size. It's not a small number. Right?
Yes.
So financialization of savings will definitely play a crucial role.
One thing we have learned from this conversation with you is that nobody can, consistently predict where the markets will be in the next 6 months from now.
True.
Yeah. Given that uncertainty, why is following a disciplined investment framework more important than trying to time the market?
So let me explain you in a different context here. Maybe you would connect to this what I'm trying to say. It took India almost 15 years to reach to 36% of urban population. We were 30% in 2010. Today we stand at 36% of urban population. I've also mentioned this earlier that urbanization is a very big theme that is unfolding and would be unfolding in next 2 decades. Now, why this is important? Let me explain this further. Where again, India also has a vision by Viksit Bharat 2047 to stand at more than 45% or to reach 50% of its working population being urbanized. In developed nation, let me give an example of South Korea. While I'm giving this example, I have few questions also for you. So South Korea as an economy or the size of South Korean economy is 51 million population. India, as we all know, is at 1.46 billion. We started the journey with South Korea in the year 1960 to 62 at the same level, where our GDP were almost at the same level, or GDP per capita were almost at the same level. Today, India's GDP per capita is known to all. We stand at around 2,300, 2,400 USD. What according to you? I have already told you the size of the population of South Korea. What according to you would be the number of GDP per capita at South Korea?
But you're saying that in 1960 we started at the same level.
Yes.
But by judging your question, I would say South Korea must be much higher. I guess around 10 to 15,000
You
GDP
have to
per
inch
capita.
little up.
More.
Yes.
How about 30,000?
Little more up.
Don't tell me 60,000.
Not really. It is around in the range of 36,000 to 37,000 USD. Right. So most importantly here, Mohit, it is that your working population is in India is 20 times more than the South Korea.
But what was the reason behind this big shift,
So the
big difference?
correct. The reason is one of the reason, according to me, prominently is urbanization. South Korean economy is urbanized in excess of 80%.
80%. And we are at what? 30%, you said.
We are 36%.
36%.
Right? I mean, hypothetically, if I have to just extrapolate our working population to the GDP per capita of South Korea, we would have stood today as a $22 trillion economy. So the urbanization, as I mentioned, right, is definitely going to unfold, and the effect and why this urbanization is clearly because of the formalization of economy that has already happened. I mean, in last 1 decade back, if I would have asked you, Mohit, is that your PAN card and your Aadhaar card is going to get linked, you wouldn't have believed me. But today is just a fact. Your digital infra is built in a way, your UPIs, your eKYCs, this is leading to the faster pace of movement or having an upward trajectory into the economy. Now, what is the benefit of urban nation or having more urban population? Is I would give an example within our economy, 60 to 65% of our GDP is contributed from urban side of the population, right? So just imagine what is the impact going to be. I mean, we have a lot of anecdotes or examples of economies where we believe that the higher urban population brings higher or incremental demand to housing. It increases the productivity, it increases the infra spend, manufacturing, right? So all these impacts of higher urban population will unfold, according to me, into the Amrit Kaal era. And that is the benefit each investor should be taking over the next 2 decades.
Rightly put, ma'am. So we all know that you have decades of experience in the equity market. You have seen many cycles. But I have just one last question to end this conversation. Why should one even know about the Chatur Amrit Kaal Fund? I know you have answered it previously, but I want to know one last note from your side. How would you explain it in just one sentence?
So Chatur Amrit Kaal is clearly designed to act as a compounding engine, right? Towards the irreversible structural shifts or the businesses that we will own, right? And let the compounding do its work. So I believe investors who are having a long-term vision or a long-term perspective. So Chatur Amrit Kaal is clearly designed to act as a compounding engine where you own businesses that are sitting in the heart of transformation, right? So if you are a patient investor and you can capitalize the volatility or you're inclined to capitalize the volatility, what it means is the moment the volatility kicks in, if you are able to put or pump in more money or invest in the downtrends or the downfalls during this period of next year or 2 decade, then this engine or this fund is definitely for you. So that's my final submission, Mohit, here. That in Amrit Kaal, for next 2 decades, if you're a patient investor, this is definitely a portfolio that will create wealth for you.
So that was the closer look at the Chatur Amrit Kaal Fund and its investment philosophies shaping India's long-term growth story. If you're watching or listening to this podcast, and if you'd like to explore more about our fund, feel free to reach us at pms@devenchoksey.com. Don't forget to like, subscribe, and share. Thank you very much.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.